This is a high. Yeah, the call is recorded. We have a candle close. So in an uptrend, these highs are what we're looking for. When we candle close above a high, not wick, candle close, then this becomes what? This becomes a break of structure. Then the highest point between this high and where we broke it becomes our protected low. Okay? In between here, you can see the highest point between here and here is here. Apologies, some people say the Zoom link's not working, but the Zoom link should be working. Glad, my bro. Thank you for reading that. Oops. So this is our protected low. Then when we have a new high up here and we candle close, not wick, guess what that becomes? A new break of structure. Now, where's the highest point between this high? The lowest point, sorry, between this high and where we closed above it? It's this point here. So guess what? Our protected low is no longer here. Our protected low is now here. If you are looking at your protected low here, you're going to be on the wrong side of structure. Your protected low is here. So what are you now expecting price to do? You're expecting price to respect this low and continue higher with the trend, okay? And if it doesn't, if it comes and candle closes, again, not wicks, candle closes below here, guess what this is? This is a change of character to the downside. What does that mean? Going from an uptrend, higher highs and higher lows, to now lower highs and lower lows. Because remember, if we're making a higher low, we should not come below here. When we do that to lower low, we go into a downtrend, which then looks like this. Thanks for Pedro for helping out in the Discord. We have a low here. We candle close. Okay, it's always the exact same, but the opposite. In this, we break highs. In a downtrend, we break lows. The highest point between this low and where we close below it is here. So this is what? This is now our protected high. And then we put in a new low. So this is a low, lower high, a lower low. So what should we put in? A lower high. So it should come below this high here. Right? And what do? We candle close below here. So now where's our protected high? It's not here. It's here, right? Then we have a new low. We candle close below it. Where's the highest point between this low and where we close below it? Is this point here. So now this is our protected high. And if we break above this, guess what? It is a change of character to the upside. And what are we expecting? We're expecting this again. So that's the really basic, simple part of it. And now we'll go to a bit more advanced, okay? This is a bit more advanced, but it's still the same thing. We have a low, high, low, high. I want you to focus on these external swing points here, okay? These highlighted in blue. Everything else is internal, okay? You don't want to focus on between what's going on between this low and this high. For example, if we go back on here, everything between this low, because this was your protected low, to this, which is your weak high, because you're expecting price higher, low, higher, high. Everything that goes on between here. So if we do all of this, guess what? We don't care about that. If you're looking at this structure, you're gonna lose all your money. Are you profitable? I'm guessing not. That's why you're here as well. So you're gonna want to listen, man. Because if you knew market structure, you catch a lot of winners. You know what I'm saying? So everything between here is internal. Yeah, any time frame, it works the same. And we are going to get to more advanced stuff. I just want to go over this first before we get to the more advanced stuff, right? Like I said, yeah, everything here is internal. You don't want to get caught up in this high, low, lower, 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 high, high, high. You're going to get stopped out. Again, same thing. Everything between this high and this low is internal, okay? It works the same on every time frame. So now that we know that, we'll just mark out structure here. You can see we have a low, we candle close below it, put in a new low. We come in, we put in a lower high, make a lower low, lower high, lower low. Where do we look to find our entries now, okay? Our entries is always in the previous zone. How do we find the zone? It's where the last break of structure was. We have a low here, we candle close below this low. That gives you a zone from this low to this high. Okay, as you can see, price returns into this zone, okay, and continues lower. And then what? We have a new zone from this low to this high. Price breaks out of it, it returns into this and continues lower. So this zone is where we want to look at our entries. And then we have this zone here. What are we expecting price to do here? We're expecting price to return into here and continue lower, but it doesn't. It breaks it. It breaks this protected high. Remember, this is external. So now what we're expecting? Bullish uptrend. So this zone now becomes a bullish one. Okay, and we're looking for price to retrace into here and continue up. And I know a lot of people, when you probably start, you're probably looking at it as like ICT, sort of a premium discount, and we come back into this special sort of, I don't know, 0.61 retracement, etc. It's similar, but it's not quite the same. We're not going to draw the fib, the zone from this low to this high. It's always the previous swing point. So it's going to be from this high to this low. We come, we tap in. I'll drop the Gambox settings in the end. Why not opposite candle rather than entire zone? Because we always want to look at this is the previous swing point. If we look at structure, we should be making higher highs and higher lows. So we should not go below this low. Okay, there are certain zones within here where you can look for a more specific entry, but this is the entire swing point zone. And then again, what we break structure, we have a protected low here. So what does price do? Price comes into your zone. You only take the trade when price comes into your zone. Only here I'm looking for confirmation. If it rips up, it is what it is. I'll wait till I get a new zone. As we can see, it comes into the zone, respects it, move higher. This is what? You break a structure, a new protected low, we have a new zone. As price comes into my zone, I look for confirmation to take this trade higher, and then we have what? A new zone here. And as you can see, this happens in some situations. We rip through and we don't come back into the zone, okay? That is part of the game. What about SND? Yeah, supply and demand, yeah, but this is we're just mainly going through market structure this lesson. I'm not going to get into confirmation either. It's just going to be pure structure. But we do want confirmation in order for price to continue higher. If price does something like this, okay, I will share this with you guys. We have a bearish zone here, right? Because remember, we candle close below this low. This is our protected high. So this becomes a bearish zone where you are looking for sells. Okay, if price does something like this, where you retrace into the zone, okay, you try to move lower, and then you continue higher. Once you see this high break here, no longer look for sells in this zone because you can see price retraced into this zone. It should give a lower low. It failed to do so. We take out that high. Now you can anticipate a change of character happening here, and you can save yourself from taking a loss. If anything, you should look for a long now, anticipating this change of character. No, it works the same with any type of candle. It's the same. And then we'll go into pullbacks now. So this in a downtrend, okay, yeah, this is where it gets tough. And we're gonna get into more advanced stuff as well this session. But this is the basics. And if you know the basics, I promise you, you can be profitable with any strategy because there is structure literally on any time frame. Okay, so you can see we have a low, high. In a downtrend, these highs are what we want to catch. These are the expansion back down. Then we have a pullback up. When we put in this high here, okay, there's certain patterns that will tell us that this high is put in. This is when I want to get into the trade and trade it lower. And then we have certain patterns here which are telling us that price is pulling back. Where are we pulling back to? We're pulling back into the previous zone. Because I know price is now pulling back, doesn't mean I'm trading into the zone. No, because as you can see, the first step of the strategy is a zone tap. No tap, no trade. So I'm not trying to catch the pullback. I'm always trying to catch the expansion back down. So this is where I want to get involved. And when I see my pattern here, I ride it back down. And then when we have an uptrend, okay, this zone here, I'm looking for longs in here. When I see my Pacific pattern here, What does that tell me? Price is pulling back. Where are we going to pull back into? These highs in an uptrend are pullbacks. These highs in a downtrend are expansion. It's the same thing. These lows are a pullback. These lows now are now expansion back up. We want to catch these. So when I see this, it doesn't mean I'm now looking to catch a short. No, we'll come back into the zone and look to catch along here. I see this. What does it tell me? We're pulling back. Where are we likely going to pull back to? This zone. And then what can I look to catch along from here to continue up? It structure works the same on any time frame, literally any, not one time frame is more important than the other. So this we'll just touch slightly on internal and external structure, right? Everything between these rectangles, internal. You don't want to do that. You want to get involved in this external structure, which is these highlighted rectangles. Not for CTrader, it is made for TradingView only. Okay, now we'll get onto this because, well, actually, before we get onto, we'll get into these pullbacks. So we know about these are pullbacks in an uptrend. These are pullbacks in a downtrend. Okay, why do we get these pullbacks? Okay, because again, structure. Can you see when you have your structure? So let's say now we got to change the character here. Okay, everything to the left is where you're going to get your pullbacks. Everything to the right is where you're going to get your expansions. So if you focus on that, okay, you will be on the right side a lot more, and most likely you're going to increase your win rate a lot more. Now, based on what I just said as well, we're looking to trade the pullback, we're looking to trade the expansion. We're always looking to trade the expansion. So you can see price puts in a high here and starts to pull back. Why is it pulling back from this area particularly? Well, you can see what are we tapping into? We're tapping into this previous area of supply. Are we trading the pullback? No. We're coming back into where? A demand zone and continuing higher. Then we put in a high here. Why did we pull back here? Because remember, we had this zone here. We pull back into this zone, we get a move lower, exactly, to mitigate supply. But are we going to trade this pullback? No. Because where are we pulling back into? This bullish zone. And remember, everything to the right of your last breaker structure, which was here, is expansion. Everything to the left is pullback. So everything to the right of this, I'm looking to trade. Everything to the left of this is where I'm expecting my pullback. I never want to trade the pullback. I want to trade the expansion. And I'll see if I can find a chart example. So NQ, you can see we are in this huge downtrend the last God knows how long. Okay, we put in a low here and we pull back. Most likely, okay, we'll find out now. The reason we pulled back from this low is because we tapped into an unmitigated demand zone. What do I mean by that? One of these, right? Zones that price didn't return into. For example, this zone here. Price hasn't returned into. It's rocketing, rocketing, rocketing. It might come back a year later. So most likely we tapped into somewhere here and we continue to push. So we'll check if we tapped into anything to the left of this. Because remember, to the left is what? Pullback. To the right is expansion. You can see we had a zone here. Now guess what? We made a zone. Price never came and retraced into this yet. Okay, we made this zone. Price never came back into it. So when we come back, God knows how long later, 11th of March to 11th of September, what's that, 6 months? Now we're getting a slight reaction. But are we looking to trade this pullback? No, right? Because we are in a huge downtrend. So where's our last bearish zone? Here, for example, now. We're looking for this to provide us a pullback into here where we're going to take the sells lower. Okay, remember, because we are not trading the pullback. We're not trading this move down. We're trading the expansion. Okay, I hope that helps. And now let's get into a more, yeah, it will be on YouTube, bro. I had this recorded, so after this, I'll just edit it a bit and slap it on YouTube. So this is a more accurate presentation of how price actually moves. And this is including liquidity too. Okay. No problem. Thank you. I appreciate all of that. We have a low here. This might look more complicated because on the charts, it's never ever going to look as clean as this, but I promise it always is doing this. We just have to find what these highlighted areas here, these external points, so we don't get caught up when we look at something like this. Okay, so let's see. We have a break of structure to the downside here. Okay, I marked that in red. That gives us a protected high where the lowest point between the low and where we closed below it. The highest point, sorry, between this low and where we closed below it. It's this area here. What does that give us? That gives us a zone, right? Remember, that gives us a zone on the way down. So we now have a zone from here to here. Now, this is where liquidity comes into part with market structure. Your first tap into your zone is always liquidity, okay? So this is my first tap into the zone that pushed price lower. This is not my protected high, okay? This is where things get a little bit more complicated. This is liquidity. You can see this zone is still unmitigated. Price has not filled in these orders in this zone. We sweep that liquidity, we continue lower. We then get a new breaker structure here. What a lot of people do, what I used to do, is I used to take this. Let me make this red. I used to take this as my change of character and now look for longs. Not knowing we're just tapping into where? A zone above. Okay, sweeping that, boom. I'll put my stop loss here for shorts, I get stopped out. I then enter longs for my stop loss here, I get stopped out. And I'm like, what? I got stopped out twice because I'm not understanding structure properly. Where does this zone now get moved to? It gets moved to here. What do? We mitigate this zone, boom, boom, boom. We move lower, nice. New breaker structure here. New protected high where? The highest point between this low and where we closed below it, here. What does that give us? A zone where? A zone here. What do we notice? We put a first tap into the zone. Is the zone mitigated? No. So what does this become? This becomes liquidity. Okay. And this is your real breaker structure. We sweep this liquidity. Doesn't want to change for me, but this is liquidity. We sweep that. We come into our zone. We move lower. Now where do we have a zone? From here to here. Right? It's like this. We've changed now from an uptrend, downtrend into an uptrend. So we draw our zone here. Okay. It's the same thing now on this. We change from a downtrend into an uptrend here. So we draw our bullish zone here. What do we say? The first tap, okay, is always liquidity. And I'll show you on the charts as well. We have a first tap into the zone that pushes price higher. We sweep that first tap, then we get our breaker structure. So we now have a zone from this high to this low. We put in a first tap that pushes price higher. We sweep this first tap. Okay, and then we get our real breaker structure here. So now if I mark out my swing points, okay, it's here, and then here, and then we put in a lower low, and then we put in a lower high, and then we put in a lower low, and then we put in a lower high, and then we put in a lower low, lower high, lower low, boom. Higher high, higher low. Higher high here, higher low. So other than the breaker structure, how do you know that the zone is valid? If it's a breaker structure, it's valid. Now I'm just checking the message now. What settings do you yeah, I'll share the zone box in the end. It's not about risk to reward strategy, it's purely market structure. Price did not sweep liquidity, then we don't get a trade. Yes, the first tap into your zone is never structured. Yes, the first tap created a break structure. Yeah, I'm gonna get into that next. So I get why you said that, but we'll get into that next. I'm just drawing it like this, for example, saying, but you'll see that the first tap isn't actually a broker structure. But now if we delete everything and then we focus on this purely highlighted areas, because remember, I've been saying it for a long now. This is the important part, and we just draw structure based on that. Does that not look a lot more simpler? You can see lower highs, lower low, lower high, lower low, lower high, lower low, lower high, lower low, higher low, higher high, higher low, higher high, higher low. It's you can be on the right direction of the market a lot simpler if you're seeing this compared to this. But it's the exact same thing, okay? You just need to know what you are looking out for. So now yo, don't draw on the chart, please. I thought I disabled that, but don't draw on the chart, please. Uh, okay. Should a break structure, then a sweep, then we execute. Yes, and I'm gonna show you on a chart. But before I show you on a live chart now, does this make sense so far? Nice, nice. Sweet, sweet. Boom. Here we go now. So let's just focus from here. Forget the fib for now. The fib's not gonna make you money. Understanding market structure is gonna make you money. Okay. We have a high. We candle close above. Okay. We put a first. What does that give us? A zone. Can you see? This is from Thursday as well. We'll do all the way from Thursday to Friday. Any time frame, anything, it's the same. You see, we break out of the zone, we put a first tap in here. We continue higher. This becomes what? Liquidity. Okay, where's my protected low? My protected low is down here. So I'm looking for price to sweep liquidity, come into my previous zone, and continue higher. The same thing. It's literally this. We have a zone, we come into it, we push higher. We have a zone. Oops, where is it? Lost it now. Here, we come into it, we push higher. We sweep that first tap. Nice. We continue higher. So now what? I have a new breaker structure here. I have a new protected low here. Here, what does that give me? That gives me a zone from here to here. What do we have? We have a first tap into the zone. Price is going to come, take out this first tap, continue higher. What do? We come, we take out that first tap, we continue higher. Is it random? No, this will happen on any time frame, any chart. You'll see it over and over again. Okay? Then what do we have? Here, why did we pull back from here? Because on the downside, we were doing what? Look, we had a downtrend here. We had an area of supply. Price pulled in, but what is this pullback just going to do? Just going to give us into our previous zone, sweep the first tap, and continue higher. Wick isn't a break, right? That was the first thing I covered, but you can count it as you're coming out of the zone and then your first tap in. So we have a new break here. We have a new zone here, correct? Let's see how price responds to this zone. So now we have a first tap into this zone here. This is not structural. This is this here. Okay, it's not structural. I'm not putting break structure, break structure. This is not structural. Okay, this is high, low, higher, high. Okay, price out. Okay, we put in a new break structure here. We have a zone here. Let's see how price respects this zone. Look at that. We come into this zone. I never got a trade here because we never came in, but we had a zone here, broke it, respected it, pushed higher. Then we have a new zone here. Okay, I'll speed it up a bit, but it's the same. Like, you can see how many times it happened now? 4 or 5 times. But if you're trying to trade a reversal, how many times have you been stopped out? You're trying to catch these highs here. Why? Why not always trade the expansion back up and make your life easier? Okay. This is my higher time frame. I'm using this as my higher time frame. Okay, for example, like this is my higher time frame. So I'm just following the trend. Continue to play price out, and you'll see it literally does the same thing over and over again. Okay, what do we have here now? We actually have a shift in structure. High, low, higher, high, boom, change of character. So what are we expecting? This bullish zone, this follow structure, becomes bearish. So now we have a bearish zone from here to here. And what are we expecting? We're expecting price to pull into here and continue lower. And that's what we do. And then we have a new bearish break structure to the downside here. So guess what? We have a new zone here. This is just the first tap. This is not structure to me. We'll see if we come and run that first tap. We don't, that's fine. Okay. We'll continue to play press up. We have a new breaker structure to the downside here. A new protected high. So we have a new zone here. And we can look for price to return into and continue lower. Okay, now this is important. So can you see we came into the zone, right? What should this tap do? Give us a lower low, right? We should get a candle close below this low here. We tried to, we barely closed above it and then immediately came back up. So now if we come take this high, what does that tell me? We made a low, high, this high, failed to make a new low, and then we take that high. Now I know we're going to get a change of character. And as you can see, we come rip that and we get this change of character. Okay, and then guess what? We do the exact same thing. So we'll play price out. We have a breaker structure to the upside now. And this is what? A first tap into your zone. This is your high. This is your protected low. This is your first tap into your zone that pushes price higher. So I'm expecting price to sweep this, boom, rip to the upside. Next time, but we don't get caught out within this range. We sweep that to the T. Boom, look at that. Do you think that's random? When you see it over and over again, you start to realize it isn't. It does this for a reason. And then we have a new break structure here. Protected low here. And by properly reading structure now, by knowing where to look, we're just doing high, low, high, low, high, high. What are we expecting? High or low? High, high. How much does the candle need to break? If you break and then immediately rip back up, to put it simply, I wouldn't trust that as a real break structure. Is to find the zone where the price sweeps internal structure and then expand. Yeah, so look, mark out your external structure first, okay? And then look for liquidity within here. So now I've marked out my external structure, for example, between here and here. Okay, now this is my zone. So anything that happens between this low and the high we put in is going to be internal. So now we put in a high here. Everything here is internal. All you want to worry about is price coming back into this zone and continuing higher. We'll see if we do that. This candle close, real breaker structure. There we go. Was that surprising? No, because we're doing the same thing over and over and over again. We'll see what we do now. Okay, where did we come? We broke structure. We had a zone. We had a first tap into the zone. Price came, swept this, boom, continued higher with the trend. And then once we break this, it'll be a real change of character to the downside, but you get my point, it's the same thing over and over again.